Hello, everyone. Welcome to another episode of Deal or Bust. We've got a great founder coming on today. This is the show that founders come on to try and get a deal done live. And today we've got a special Future of Fintech edition here live with CBInsights. I am looking forward to meeting all of you. And this format's going to be really interesting. We've got a founder coming on that's growing incredibly fast. You just saw a sneak peek at the P&L. It's a fintech play with a SaaS platform behind it, growing to a $6.2 million run rate today, up 120% year over year. The question is, will the buyers coming on live today see value in the business, and what will they value it at? We've got buyers representing billions of dollars of unallocated capital. They want to get deals done. You're going to recognize them. We're about 10 minutes away from meeting them. We've also got two great experts coming on. You guys are really going to enjoy in Martin Chavez, ex-CFO and CIO at Goldman. Really great guy, knows his space incredibly well, and Ned at Clock Tower. We'll meet both of them briefly. But guys, the show doesn't work without all of you guys. So we can see your comments live. Go ahead and give us a test real quick, guys. Let us know which firm you're with and where you're joining from in the comments, just to make sure we've got the comments tech working appropriately. And again, when you guys do that, I can bring your comments live. So check this out. Rana always likes to be first. Rana, welcome. Welcome to another episode. I'm glad to see you here. Who do we see in the back end? Without all of you guys, we've got Ian on the back end. We are watching the CBInsights chat live in the CBInsights swap card interface as well. And guys, I encourage you to ask questions too, right? If you've got questions about the P&L, the growth, the company, the product, ask it in the questions. We're watching that stuff live, and we will bring those questions live into the interface as they come up. So I see Ian from Prudential is here. Vijay with 500 Startups San Francisco. Vijay, good to see you. Anna joining as well. Anna, it's good to see you guys. Who else is joining today, and which firms are you with? Don't be shy. We're watching the live feed. If you're just tuning in because you're maybe a little late leaving one of the earlier sessions here at the CBInsights Future of Fintech event, I want to welcome you. You're watching Deal or Bust, where founders come to try and get a deal done live. We're about 2-3 minutes away from meeting the founder who's built a great company. So let me tease you a little bit. What is this company? Well, as you guys know, there's 6 major business models happening in fintech right now, where we're seeing all kinds of different valuations. You've got fintech infrastructure with Galileo, incredible company. You've got these iBuyers popping up, big insurers, IPO filings with Root, these online and digital lenders. You've got these payments businesses and neobanks. But behind all of these, there's pipelines, data pipelines, all kinds of infrastructure pipelines driving these business models. And so our founder today has built an incredible model that takes what you see on the screen right now and makes it readable, digestible, pipelineable, as we'll call it, and adds value to a lot of different providers in the space. You're seeing here statement descriptors flowing through a platform. Now, this all started when big companies started making big bets. Goldman Sachs and Citi making a $20 million bet on Second Measure back in February of 2019. Again, Second Measure focusing on consumers' credit card info. Our company today focuses in on this exact same space. Our experts, you're going to meet in about, call it 18 minutes. Martin Chavez, ex-CIO and CFO at Goldman, also board of overseers at Harvard, and Ned, principal at Clock Tower Tech. He's obviously an investor. They're a big investor in Chime, running a $70 million fund. And our buyers today, we're going to meet shortly, great buyers. Daniel Rose of Commerce Ventures, $60 million fund, obviously find Bill.com. We've got Ryan with LLR making a lot of moves, as they have historically, in the fintech space, focused, not exclusively, but focused aggressively right now in that area. Recently doing a deal with Y-Charts that had passed, $15 million in run rate, according to a press release. And Eric Scott, MD at Palladium, over $3 billion in assets under management, now running his own fund focused on buyouts in the space. We're going to meet them live. We're going to see, almost like Shark Tank, can we get a valuation agreement here live in the next 40 minutes? Time will tell. Now, here's the history, folks, that we're talking about. Back in 2013, we started hearing people talking about the unbundling of banks. Will these tech players start getting into the banking world? And we've seen the headlines up through 2018. Now, 7 years later, as you guys know, it's happened, right? You're banking with your search engine in Google, or maybe your mobile provider with AT&T, or getting a credit card from Apple. It's here, it's now, it's happening. This company is playing directly in this space. If you're fans of CBInsights, which you all are, you're reading Anand's great reports every day with his traditional, incredible direct character and these great infographics, you know and you're familiar with what the unbundling of the banking system looks like today. It's happening aggressively. And so the question is, who are the next major players as this unbundling of banks continues? So without further ado, I think it's time to meet our founder. Here's a bit of a teaser though. 2018 revenue, 1.9 million. Grew in 2019 to 2.7 million. On track for 2020 to pass $6.4 million in the middle of a global pandemic. They're growing like you wouldn't believe. We will see coming up the real-time P&L with actuals through 2020 Q3. You'll see they're well on their way to hitting this number. And this obviously isn't possible without a great founding team. And it's important for me to reiterate, guys, we're live. This is not a re-record. This is not a recording. I'm going to make my face big here for a second. You can see here it is 10:06 right now, real time here on the West Coast. You guys should ask questions live inside of the CBInsights feed. We'll bring them on live. I want to say hi to a couple of you guys real quick. Mohammed, good to see you, Mohammed. Do we love the fintech space or what? We've got Giacomo. Did I say that right? I butchered the hell out of it. I'm so sorry. I'm going to call you G. Okay, we're going to call you G. G joining with the Yale Innovation Fund. G, good to see you. We've got Ryan, deal or bust, greater than Shark Tank. Ryan, we'll see if a deal happens today. Let's see, Zelko. Good to see you, man. Who else? Christopher saying, been a few weeks. Guys, good to see all of you guys. And again, we're watching. I see John Schaffner, good morning all, joining from Minnesota today. Michael from Helsem, a fintech in the payments space. Helsinki Business Hub in Finland. Sandeep, good to see you. Hanuai Kim joining from South Korea. Guys, are we ready to meet the founder or what? Are we ready to meet the founder? All right, let's go ahead and make this happen. So I want to introduce Rob Heiser to the show. Rob, welcome to Deal or Bust, man.
Hey, Nathan, thanks for having me on. Thanks for CBInsights for including me in this great group of industry leaders.
You've built a great product and segment. We're going to dive into it. But just like Shark Tank, what are you looking for today? What kind of deal are you looking for?
We're looking for either a majority or full buyout, something that allows some of our early investors to take some money off the table.
How much have you raised to date?
35 million.
Okay, 35 million. Over how many rounds?
It's mostly actually over angel and one large family office. So it's been over time.
So 35 million raised back, and what was founding date?
2007.
2007. Man, you pick interesting moments for big events. 2007, pre-2008. We're in the middle of a crisis right now. You like a good crisis, I guess.
We've grown through both, so I'll take it. Right?
Okay, so you're looking for majority buyout here. So you're looking for someone that would be interested in taking larger than 50% of the company. Specifically, a chunk of that will go to secondary to buy out early investors. Will any of that, or would you be happy to see them that go to the balance sheet capital as well?
Yeah, I mean, we want to, it's not just about money for us. We want a really good investor, a partner that's going to help grow the business to the next level. I mean, we have something that can bring scale, someone can bring networks, relationships that we just don't have today.
Yep. Guys, if you want to follow along, the product is segment. We're going to spend 3 or 4 minutes having Rob talk through the product before bringing on our buyers. And our buyers will then ask clarifying questions related to the product. We'll then bring on our experts, industry leaders. Before getting to the end of the show, we'll see if Rob gets the kind of partner, the kind of deal that he's looking for. So Rob, at its core, what is the segment product? What are you guys working on?
So segment, like I said, we're about 13 years old, and we're really focused and obsessed about understanding financial transaction data. And from that slide that you showed before, those are all real, merchant strings, payee strings, in which we actually do real library science, and so that's what you're looking at right there. Those are real, real payments, any type of payment, ACH, card, credit, debit, wire transfer. We look at all types of financial transaction data, and our focus is really to understand it at an intimate level, really to do the research. And we have an army of library scientists that do that. And what they do is they look at the transactions. You might be able to look at those transactions and be able to identify maybe a couple things, but they're very cryptic transactions too. Like one, for instance, is that WDW CRO ref. If we take a deeper dive into that one particular transaction, some people might understand it's Walt Disney World, right? It's WDW stands for Walt Disney World, but not many people understand that's the Disney Vacation Club. right? And so we break this data down by having either a master's or PhD degree library scientist doing real research on the transactions. This leads into a very robust taxonomy, very granular, deep and wide. We want to bring a ton of value to our customers, right? And what's great about our technology is that it delivers insights, both from a granularity perspective, from an accuracy perspective, and our speed is second to none. So it's really our differentiator in which what we do in the space. And it really manifests itself into 3 different products. Our one product's merchant cleansing. That leads into a second product, which is, the customer insights product. That product allows us to take these great golden nuggets of, spend over time and deliver that in a way that we understand lifestyle, we understand hobbies, we understand interests, we understand what nonprofits they support. We do all of this by looking at those transactions over time, and we do that for both banks and credit unions so they can best understand their members or customers.
So just because you're selling mainly to credit unions then, Rob?
What was that? You're
selling mainly to credit unions. Who are your main customers?
Either banks or credit unions. Yes, both.
Okay, and how many customers today?
We have 132.
Okay, very good. Now, do you want to walk through this quickly before we bring on our buyers? What are we looking at here when you talk about no transaction left behind?
So we are, like I said, we're obsessed about understanding transactions. And if you look at the transaction, this particular transaction, which says Walmart, what's interesting is this can give you a very false positive because this is actually for a gas purchase. This doesn't mean they're a Walmart shopper. It just means they purchase gas at Murphy Oil. If you understand what we do and we look at the stream of transactions as fast as we can get them, there are certain indicators that will tell you that a customer might be leaving. A good example of that is, let's say you're wireless. Nobody gets rid of their wireless company, right? They switch wireless companies, AT&T to Verizon maybe, but that doesn't mean they're going to leave their wireless company. What we can identify is that payment is no longer happening within the credit card and identify it's probably going to a competitor. So you need to try to win that business back.
Yep. Very good. Well, guys, again, with that being said, the next move here is to bring on our buyers and let them, Rob, ask questions about the product. We'll have a nice back and forth here. Let's go ahead and bring those folks on. So we'll bring on Ryan Goldberg first. Ryan, welcome to Deal or Bust.
Thanks, Nathan. Good to be here.
You bet. So LLR Partners, I think in October, how much did you guys close a new fund?
We recently closed our 6th fund, which is $1.8 billion.
And what kinds of deals are you guys looking to do?
Yeah, we're focused on growth stage investing, minority or control, broadly across the technology and healthcare ecosystems. I spend most of my time on fintech and payments.
Very cool. Let's get our next buyer live here. We've got Eric Scott. Eric, welcome to Deal or Bust.
Great. Thank you. And hi, everybody. Good to be here.
So you were managing director at Palladium, $3 billion in assets under management. You've since said, you know what? I want a little more freedom. I want my own money to spend. What are you working on now?
So right now we formed Advance to focus on transformational growth opportunities in services and consumer spaces. So we're looking for backing great teams, generally controlled buyouts with EBITDA of 5 to 25 million.
So are you out? I mean, is Rob's deal too small for you? You saw the P&L, he's doing 6.4 million right now on a run rate wise.
You know, it is on the small side of what we'll consider. And part of my questions for Rob are going to be where he sees the business going over the next year or two.
Yep. Okay, let's meet our last buyer here, Dan Rosen. Dan, welcome to Dealer. Go ahead and turn your video on. Welcome to Deal or Bust. All right, Dan's working on his video. Dan, we'll bring you back on. Eric, let's go to you first. So go ahead. You guys, Ryan, Eric, you've got 10 minutes here with Rob. What product-oriented questions do you have for him? Eric, you first.
Okay, Rob, they gave us a little bit of time where I was madly taking photo screenshots and writing notes down. But I'd be interested in the 3 segments you're focusing on, what the revenue breakdown is in each of those. I think there were payments, customer insight, and marketing automation.
Yeah, so I would tell you, so we recently launched the merchant payment cleansing. It's always been the foundation of our product. It's been part of what we do for customer insights and marketing automation. But if you look at what we're generating right now from a revenue perspective, we're well into 90% in the customer insights and marketing automation. We just started with that product earlier this year, and we're getting a lot of traction early in the market.
Great, thank you. And the killer app seems to be cleansing these financial transaction payments. Is that buried in those 2 segments, or is that the 3rd segment?
No, so that's the first thing. So, we've always used that as the basis of all our technology. It's the thing that makes everything tick. We just have never exposed it in a REST API or as a separate product. We just did that at the beginning of this year.
Okay.
Ryan, let's jump over to you. And Dan, I see your videos. We're going to bring you on here in a second. But Ryan, what product question do you have for Rob?
Rob, nice to meet you. Congrats on what you've built. And hey, Eric, good to see you. Rob, it'd be helpful to understand where the data is coming from, where you're sourcing it, how you're cleaning it, and ultimately, when you sit in front of the buyer at the customer, the bank or the credit union, what insight are you delivering and how do they leverage it? So I know there are probably 6 questions in there, but walk us through the journey a little bit.
So the first is easy. We typically sell through channel partners. So we have channel partners that represent about 90% of the core banks today. So we typically sell through core banking partners. That includes, all of the major ones that we sell through. And they either embed our technology or they white label it. So again, our go-to-market's typically through channel. We do direct relationships, and we're even a VIP with Jack Henry, so we can get data easily out of their core system. So getting data for us is not hard. It's typically we're already integrated and pre-integrated. We can actually get clients up in as fast as about 6 weeks because we're already pre-plumbed for everything. In terms of what's the insights, what's important to understand is not just we see all of the data and we have it obviously creates a unique understanding. The one thing we never get, and this is important, we never get PII. It's all tokenized. And so from an institution perspective, I can do all this analysis and help them understand each customer and what they need without I don't need to know who the customer's name is. Now, when we do that, we have a whole client success team that works with each one of our customers to help them understand their data and all their customers and what they should expect next. Do they think they're going to trade? Do they need a mortgage? Are there car leases coming up? But even to the point where they need to understand the hobbies and understand what do they support so they can. There's more personalization in around their messaging. So you're just not throwing buy a mortgage, get a credit card. It's got to be at the right time and have to have a relevant message because you only have a certain amount of time to really deliver a really good message that's relevant to the consumer.
Ryan, did I answer your question?
Yeah. Describe a little bit, Rob. It sounds like it's more banking data, but are you also analyzing credit card data? What streams of data are coming in on the back end?
It's credit card, obviously credit debit, ACH, and wire. The other thing that we do is we typically get a lot of data from the core that's more relationship data. So we understand all the utilization of their products, and so we help them. I'll give you a great use case. There's a lot of times institutions might open a home equity line for a customer, like helping a customer get capital out of their home, but they never draw on it, and that they have to reserve funds for that. So we help them educate the customer on what things they can do to draw against that. And so that's one use case. Another use case that we did earlier this year is we help a lot of our customers understand what's called hardship deposits, which are unemployment, payday lending, something to help them understand that there's maybe been a change in income within that household, so they can reach out and have a conversation. And it's a good conversation. How can we help you through this pandemic? And that's one of the reasons we're growing so fast.
Guys, if you're just joining, you're watching another episode of Deal or Bust FinTech Edition here with CBInsights at the future of FinTech. We've just met Rob, the founder of Segment, an incredible company that's growing very rapidly, up to $6.2 million in terms of run rate with a SaaS play, but again, very close to the payment analyzing FinTech data. We've met 2 buyers in Eric and Ryan from LLR. We're going to meet our third here real quick. Dan Rosen, welcome to Deal or Bust.
Hey, how's it going? Thanks for having me.
We're doing well. Hey, quick background here. So what are you focused on at Commerce and what sorts of deals, investments are you looking for?
We're an early stage VC firm. I focus 100% of my time on fintech investments, primarily infrastructure and tech platforms for financial services, so very well suited. We're generally earlier stage focused, but know this space pretty well given our investments in companies like MX.
So what questions do you have for Rob on product?
Hey, Rob, good to see you again.
Good to see you, man.
So I think my first question, really, you flashed 3 product areas. I'm curious which one has seen the most growth over the last 12 months because you've had some impressive growth.
I would say mostly the customer insights. We are second to none in terms of that product. I mean, understanding a lifestyle and the needs of the customer. And part of that growth is also from adding new partnerships. We sell through channels. So as we add channels, we get bumps in revenue, because then we're bringing on basically a whole new pool of opportunity. And so we've been adding a lot of channels over the last 12 to 18 months.
Dan, any follow-ups?
Yeah, my other quick question is, obviously there's been a lot of activity in the financial data space of late, and then there's some regulatory stuff going on with open banking. What do you make of the competitive landscape?
That's a great question. I would tell you, we feel that we're really well positioned because of our channels. Obviously, one thing, we have really good relationships with all our partners. I do think there's going to be, the other thing that's important about us is that we never take any PII data. We do everything on behalf of the institution. We have a large patent portfolio that backs up all of that from, 10 domestic patents. And so our focus has always been on, leveraging the data in a way that we can help the institution serve their customer. I think it's a very crowded space, but I do think we're probably the best positioned by creating barriers of entry for other competitors.
Guys, good questions there. Eric, any follow-up questions from you or Ryan on product?
I'd be dying to hear, Rob, what you think about in the transaction data cleansing space when I understand what you're doing, and especially in credit cards. Do you worry about Visa or MasterCard or Amex coming in there and saying, let's just do that ourselves? I mean, what prevents them from coming in and taking that over?
Well, I mean, to go back to, who's our top competitor, typically the do-it-yourself is always the number one competitor internally at any institution. But if you think about what Visa and MasterCard and American Express are focused on, it's not necessarily understanding the transaction like we do. I mean, we take a real understanding of, research. We have about 400,000 hours of master's or PhD degree research going into understanding about 100 million transactions, different transaction variants, to a very granular level. So it'd take a long time and a lot of money for them to kind of catch up to where we are from a granularity, accuracy, and a speed perspective. And I think they'll eventually be customers, right? Maybe they're listening today.
Yeah.
Guys, very good. So here's what we're going to do. You guys now really understand the product. I see you guys in the questions. We're going to get to you guys in a second. Michael Koala asking, hey, listen, what's driven the massive growth the last few months? We're going to look at 2020 real-time data from Q1, Q2, and Q3 closeout, and then you'll see why they're on track to break 6.2 million in terms of run rate. Before we do that, though, we're going to bring on two great experts, ex-CFO and CIO of Goldman, Martin Chavez, along with Ned at Clock Tower Ventures. They're sitting on some massive winners in their portfolio. Before we get to them, though, let's take a quick temperature here with the investors and buyers. Ryan, are you interested in sticking around and learning more on the P&L, the customer growth, churn, things like that?
I am.
All right, Eric, what about you?
Definitely. Thank you.
Okay, you guys are going off screen here. Dan, what about on your end?
Absolutely.
All right, stick around. Guys, you're off air now. Now, Ryan or Rob, let's talk a little bit to the audience here. Michael's saying, listen, what's driven the massive growth over the last few months?
Well, I think, as we add channel partners, we add growth. And the other thing is, we had an incredible vision, 13 years ago to do this, and the market also caught up to that. And so as you see what's happening with, COVID and the shutdown, it really puts a lot of pressure on the institutions to better understand their customers and better serve them in a way that they've never done that before. And so now you start to see a massive inflection point in terms of, any size institution starting to really want to understand their customers better. And that's why we're seeing the growth we're seeing, and we don't see that slowing down.
Justin Potts in the CBInsights feed said, listen, building this in-house with AWS TextTrack and Sage or Maker would cost less than $1 million in 4 months for positive lift on cleaner data. Is it that easy to replicate Segment?
No, no, because I'll give you a great example. If you go back to just understanding the transactions, there's a lot of people in the space that just try to do this with algorithmic, right? Either machine learning or artificial intelligence. You have to do real research. A lot of these transactions are very cryptic, and it takes time and energy and effort to go build out the rule set in the engine to be able to understand the transactions at scale to the granularity that we do it. And that's the big difference. Like we have other competitors in terms of, yes, AWS and what they're trying to do, but the granularity they have and the accuracy they have is too low. It might be okay for, a baseline product, but not to do real, modeling, data science, chatbots, something that's important to your customer that makes it really relevant.
Yeah, you can see Brian in the chat says this is very interesting. Seems like a big opportunity here. It's why PayPal spent $4 billion on Honey. Brian, again, we'll see after the break if these buyers and investors come back on and make an offer that Rob is looking for. Rob, go ahead and repeat what you're looking for again for folks just joining.
We're looking either for someone to come in to take a majority stake in the business, and for our early investors to take some liquidity out of the business, some cash out of the business, or an entire buyout.
Yep, very good. Now, John Schaefer joining from Minnesota in the CBInsights chat. I know it's cold up there, man, but get your fingers working. Put some questions in the CBInsights chat. We'll fire it over here to Rob. Michael Salza, same to you. Sandeep Shah from Finland. Guys, fire those questions in. We're now going to go to our two experts. I'm going to go to Martin. I'll go to Ned first and then Martin, and we'll let them sort of go back and forth. This will be fun. So, Ned, welcome to Deal or Bust.
Hey, guys. Thanks for having me.
You bet. So you and I had the chance to get coffee a couple weeks ago up there in Santa Monica, and I love just hearing your direct, aggressive approach on the fintech space in general. When you look at a company like what Rob's building, what do you think is the biggest sort of untapped opportunity, and what do you think the biggest risk is, the thing that would hurt his valuation?
Yeah, I'll start with risk. I think it, and you can see it in the financials, it's really that gross margin expansion that, and we haven't seen the actual quarter over quarter, kind of the actuals to date. But that really comes to kind of the go-to-market motion through channel partnerships. Right? And if you're going with core banking providers, they're known to have some rough elbows in terms of pricing and the revenue share. It can eat away at that gross margin over time, or it can be hard to get off the ground in the early days. So that's a risk that I would always see in terms of what that kind of over time gross margin profile for the business, when in the past it actually hasn't been kind of what the best making this year and going forward.
Rob, can you speak to how do you incentivize channel partners? Does it hit your gross margin? Do you pay them 40% affiliate fee sort of deal, or what's it look like?
Yeah, I mean, it's a white label. They're typically making 35% of our top line revenue. But what's important to know is that we end up being kind of the tip of the spear of other products that they have. So I understand what you're saying, Ned, but a lot of the times they're leading with this product because when you think about a core provider, they're not so focused on understanding the individual transactions. And so what we do is really help them do that. And then there's a lot of follow-on products that help build upon the foundation of our data. And that's what you're seeing more and more as we get more deeper relationships with these partners.
Yeah, and I would say that's probably kind of the big kind of upside here, right? Is not only controlling the data, but controlling the narrative with the customer, right? And the ability, it's not just to understand the transaction. It's actually then the conversion into those other products. That would be a question I would have, but I would think a kind of core KPI of this business is to say, I'm not just understanding your transaction, but I'm actually converting you into multiple other products by saying, hey, this is working. The insights really matter. I'm getting to the right product, to the right customer. And that is really what all these financial institutions want to do, right? The name of the game is cross-sell. Wells Fargo got in trouble for that, doing it the wrong way. But actually, fundamentally, that's actually what really good financial institutions do. They sell multiple products to the consumer. So the ability to convert into those multiple products is what I think the financial institutions need, and if the tool can unlock.
Yeah, and I think that's exactly where we think we're well positioned, right? Because I think if you're trying to sell this directly without the core, next to you, I think you have a lot of challenges, right? Getting data, access to data, especially as you go down market, it's not every institution has the ability to go just get their own data, which is hard to believe, but they just don't have the technology capabilities or the staff or resources to do that. And I think that's what's so powerful about what we've built is that we have great relationships with these partners, and we want to help their customers succeed, and we want them to help buy other products from these our partners.
Ned, I want to give you the chance to repeat what you told me over coffee because I think it was really important and a lot of people don't discuss it, but you talked a lot about how different fintech companies use certain wedges, right, to build a beachhead and then to drive expansion. And we talked a little bit about these balance sheet businesses right now, raising gobs of capital, selling deficit spending for 5 years and $1 billion a loan take before they back into a highly profitable business. And you said, obviously, you see some risk there. You're one of the early investors in Chime. Can you speak to sort of what their early mousetrap was and why it was so effective for them growing to where they are today?
Yeah, I think when we look at consumer-focused fintech, and this kind of ties into what Sigma's trying to do, at the end of the day, most of this product being sold to the consumer, it really is a commoditized product, right? It's a checking account, it's a mortgage, and so it's delivering it at the right place at the right time. And why that matters is because it really does control your cost of acquisition, the cost of producing that product, right? The experience, and that all feeds into your growth. Right. And so the ability to control the production of that financial product, the delivery of that financial creates basically surplus economics. Unit economics. And so that's what Chime was really good at, right? Chime was an incredible acquirer of consumers in basically a great financial experience, but at its core was a very simple checking account. And that's what we see great fintech, consumer-facing fintechs actually do, and great financial institutions do, is they're able to build a service, right? And do it at a very cheap cost and a much better service level than the incumbent solutions can do. And what that unlocks in turn is for these fintechs to actually spend into growth with really great gross margin profiles to do that. Yep. That unlocks a tremendous amount of growth capital time as they can serve as conduits for people who can continue to plow positive unit economic margin. And that what we think kind of delivers mass value, particularly.
All right, Ned, you know this space well. You see LLR on, you see Eric on, you see Dan on. Do you think Rob gets a deal that he's looking for in this sort of space? I mean, do you see secondaries happening at this stage, or is he too early?
I think it's all about, this is a cop-out. I think it's all about what Rob wants, right? It's all about kind of use of proceeds. We tend to not see at this earlier stage where you're pre-EBITDA, positive EBITDA, and you're just transitioning maybe into kind of a classic growth equity story. It's a bit of an area, and this is what those folks that kind of go later would have a better kind of focus on. But for us, it's really, okay, the business has actually made it fundamentally, in our mind, what I see, a really step function change in top line and in gross margin profile. And the question will be is how much data is there? How much performance is there in the last 6 months that a growth equity investor can say, I have confidence in the cash flow of the business next year and the year after, is really kind of the question.
Yeah, I can tell you that, we've decided to invest in the business. That's why we're running, if you look quarter over quarter, we're pretty even cash flow. But I think where we want to go, we need to invest in the business. We don't have the growth capital behind us, right? So Nathan's showing more quarter over quarter, and you can start to see, we know we have healthy margins, and as we grow that, but we're investing in the business, we're investing in people. People are what make the business for us, and how we've innovated and how we continue to create a great product. So we have no choice but to, this is me and the other four board members decided, let's invest all our profitability right back into the business to grow the business.
Yeah, and by the way, for the comment C in that quarter, I mean, to me, the story here is not just growth, but really is expansion, right? That's a very different profile than, right, we're in 28 year doing.
Ned, your audio is cutting out. So Liz, I think I'm gonna summarize what you just said, but you said expansion here is really what's key. I appreciate you jumping on, man. Clock Tower Ventures, if people want to learn more from you, that's the right link, right? All right, thanks for coming.
Clock Tower Ventures, Clock Tower.
Thanks, Ned. Let's bring Martin on. Martin, ex-CIO, CFO at Goldman. Martin, welcome to Deal or Bust.
Hey, happy to be here.
So you were like one of the folks at Goldman where you're looking at deals like this all the time going, do we buy this company or not? What do you think the biggest risk is in Rob's model, and what do you think the biggest opportunity is?
So I've got so many questions. First, Rob, congratulations to you for getting the business to this stage. And my very first thought is, why are you selling it? It does look like you're at a step function, but I understand that you want to invest. So I'm curious, you said something in passing that the principal competitor is do-it-yourself. So I'm going to infer from that the bank's asset size that you're selling to is relatively on the low end. Is that right?
Well, that's one of the reasons we want to partner, right? Is because, we've proven our technology can compete all the way to the tier 1 institutions and have done pilots there, but we don't have the resources, capital to go execute on a tier 1 deal. If you look at, would Goldman Sachs sign a deal with a company doing $6.5–7 million of revenue?
But potentially, that is something that Goldman would do in a particular business that I looked after, right? We would only do it if we saw that business would actually potentiate some other revenue streams for us. So I'm also curious. You mentioned that you rolled out a REST API. I think you said at the beginning of the year. Now, I just have a thesis that the entire financial ecosystem is partitioning around APIs. You're either the best producer of some API, which you intend to make into the standard, and you're a consumer of all other APIs. So I'm a little surprised that you got to that API rollout pretty late in your development where people. Go ahead.
Let me explain that a little bit. We've always had APIs within our platform. We launched a new product, which is the foundation of our product's always been the merchant cleansing, but we've never exposed that as a separate product. We've used that to build the customer insights and our marketing automation. We decided, about a year ago to expose that as a separate product and expose an API and other ways to consume that data so that someone could literally do it in real time. They can pass, if you're running a credit card transaction, you can pass it to our API. We'll pass it back with categories and even a logo in some cases, depending on how big the merchant is. And so they can display that any way they want. They can use that for modeling. We just didn't release that product internally. Has always been an API. We just never released it to customers directly.
Okay. It is what the big banks will want, right? They will insist on that kind of integration point. So, all right. And then also, I found it fascinating that you made a big bet on library scientists, and I have a huge respect for them. I'm just wondering, is that because you started the company in roughly 2007 before machine learning really was able to do anything useful? And do you have all the library scientists you need? I don't know how the revenues of your business depend on paying more library scientists.
That is an excellent question. So what's great about our technology and the thesis of our business is that we could build a business around small pieces of data that we can resell over and over and over again. And that's the rules that we create. And so will it ever be over? No, because there's new merchants created every day. And so, but the thought behind this is if we can create an incredibly leveraged data asset that we can sell over and over and over again, that our gross margins are only going to increase as we grow customers. It's taken a long time to build that ecosystem, that infrastructure to understand over 100 million unique strings, but now we have, and that's why we're winning nonstop in the space.
So to get to your question, Nathan, and others have alluded to this, my understanding from the network providers such as Visa and Network and MasterCard is that they see that as their core, is understanding the merchants. Right, and they will say that's why they're not worried about CBDC and Bitcoin and payment rails changing or anything. And so, just stepping back, I would wonder if MasterCard is not your biggest competitor. Others have mentioned that.
Well, I think what MasterCard, obviously we do compete with MasterCard. They do have a competitive product. It doesn't have the accuracy and the granularity that we have. I think the other thing is there's a big gap when you think about MasterCard because what they're processing is credit. We process ACH and wire also. And so a great use case for a lot of our institutions is identifying anytime there's a payment being made to competitive mortgage or held away mortgage, held away credit card, we're showing them, where their other products are without running any credit checks. This is just following the money from the institution that's our customer to where it's headed. And that's a big differentiator between MasterCard and us.
Got it. Thanks. Those are my questions.
So, Martin, if you were, you're not at Goldman anymore, so you're not speaking on behalf of Goldman, but you were there for you were there over a decade, right? You made many acquisitions, sort of in this sort of space.
20 years, but who's counting?
20. I'm trying to give you 10 years back here. Give me some credit. You don't need it. But if you were looking at buying a company like this, how would you value it? There's obviously a strategic component with the tech platform, but from a revenue and growth perspective, how would you value it? 6.4 million in revenue.
Yeah, we'd look at forward EBITDA. So just like one of the other panelists mentioned, that's it. We'd have to develop our own view of what the EBITDA could be with our help and with our scale and with our capital. And that's the way a large number of investors would look at it. But it would be relatively rare for Goldman to go for a majority stake for all kinds of reasons, right? Usually we want other banks to use these things too, and Goldman being a majority investor doesn't usually work. So we might pass just because you want to sell the whole company or a majority stake. Probably for Goldman, it would probably be majority stake. But again, not speaking from them. This is just how I used to think about it.
Martin Chavez, people want to learn more from you. Where can they find you online?
You can find me at www.rmartinchavez.com.
Thanks for coming on Deal or Bust. I appreciate it.
Pleasure.
All right, Rob, where's your head at? We're about to bring the buyers back on. They listened to the expert advice. They saw the P&L. They saw the quarterly breakouts just now. You're operating at break even because you're reinvesting in growth. You feeling good or are you a little nervous?
I feel great.
That's a good way to feel. That's a good way to feel going into this. So, all right, let's bring our buyers back on. We've got about 5 minutes left. So this is actually gonna be rapid fire. I got sort of caught up there with Ned and the folks. Let's bring back Eric, Ryan, and Dan. Dan, I'm gonna go to you first. You heard a lot of the expert advice was, listen, we wouldn't really touch, like Marty said, buying something like this if there's not EBITDA margin, but you make investments all the time into companies that are burning capital, right? How would you look at a company like Rob that's reinvesting everything in growth?
Yeah, I don't think we would discount it too much, just for reinvesting in growth. But, as you said, it's probably different for a full buyout without profits. I'd probably value this a bit more conservatively. My guess is, somewhere between $45 and $60 million, with the key determinants being around sales efficiency, churn, backlog, and near-term pipeline. But if we could persuade him to do a minority deal, take some growth equity, I think it's probably a better valuation for him, something that looks between maybe 60 million on the low end and could be as high as $80 million.
Why is that? Why would the valuation be higher if it's a minority stake versus majority buyout?
Well, first off, there's just the positioning around the deal. Growth equity, in banking infrastructure, lots of players interested in that right now. So I think you just generally get a better price. Also, I think, you'd have aligned incentives with the founder. Right. So he's going to want to grow it aggressively. He knows the business better than anybody. I think, people are probably more willing to bet on the growth profile there, especially with the recent growth. So my guess is they'll give him a little bit more value there if the incentives are totally aligned.
Yep. Super interesting. Ryan, let's go to you. Any follow-up questions after the expert advice?
Yeah, Rob, 2 questions. One, can you talk about the uptick in revenue in Q2, squarely in the middle of the pandemic?
Yeah.
And 2, why sell a majority stake now? How much do your current investors own?
Yeah, so let me talk about the uptick in Q2. Typically, our Q4 and Q1 are the busiest parts of our year, right? So we sign a lot of deals between, in budget season, and that's either, prior to or post budget season, which is in those 2 quarters. There's always basically a 90-day book to bill. And so that's why you see that jump in revenue. So we're going to see that again this year. We don't, typically we think we're going to get 8 to 10 new logos between now and the end of the year. So that's why you see that inflection every second quarter.
Okay.
Your second question was?
Why sell a majority stake? How much do your existing investors own in the business?
So there's, we have a lot of investors. We have, because we don't really have a venture fund in the deal, we have, 180 investors that have been invested in the business, obviously since about 2008, 2009. And we've raised rounds over time. So what we're trying to do is give them a liquidity, some kind of liquidity event, take some money off the table. They've been in it for a long time, right? And then pick a partner that's going to help us grow to that next level. And, we have a one family office, which is our largest shareholder. I'm the second largest shareholder in the business. And then we have 178 other investors who love the business, but I think it's time for them to try to
Rob, how much equity do you and current team members own in the business right now?
Me and current team members?
Yeah.
Not including the large investor?
Correct.
About 30%. And what's important to know about our business is that every single one of our employees is a shareholder, right? Mm-hmm. Everybody. That's been the mantra since we started the business. They either have options or shares. And so they feel like they own that. We wanted a vested interest from every employee, and that's why.
If someone gave you a majority buyout offer, would you take any of your guys' 30% off the table, or would it go solely to buying out and consolidating your cap table in the form of the 70% that you have exposed to 118 shareholders currently?
Depends on the deal. Depends on who we're partnering with. I mean, if it's just money, it probably doesn't matter. If it's smart money and a good partner, it's definitely something that we're interested in.
All right, Eric, we're going to you. Last question, and then it's offer time, or you're out, and state why you're out. Eric, any follow-up questions after expert advice?
Yeah. So my question, Rob, is I see your growth trajectory continuing on next year. So it's very impressive.
Thanks.
Yet, and your gross margin continues to expand, which is also very impressive. Even though you've got these distribution, channel partners, why is your SG&A going up so much? From it's been kind of a steady 3 to 4. Now it's going to 7-4. I thought a lot of that gross profit would hit the bottom line, enabling you to earn 4 or 5 million of EBITDA.
Again, we're investing back in the business, right? And where we are now is that, we have a great team, but we think, to get to the next level, we need to have some really great team players into that. And that comes with really strategic thinkers.
Mm-hmm. Okay.
Yep. All right, guys, very good. So Rob, you already sort of got a sense of where Dan's head is at. Minority investment would look something like 60 million plus valuation. If it's a majority sort of situation, it's going to be lower than that, call it 45-ish range. Ryan, what we're going to do now, guys, is go to each of your buyers and it's decision time, right? Either sort of present a range of how you'd value the company in the form of a soft offer. Obviously, nothing legally is concrete on this. It's just like sort of Shark Tank. It's educational, but also kind of real because we have all the numbers in front of us. So Eric, I'm going to go to you first, then Ryan, then Dan. Eric, what would you value this business at? And if you're interested in doing a deal, what sort of deal would you offer?
Yeah, so I think about valuation as both, combination of that revenue growth and the earnings impact of it. And because, Rob, you're reinvesting in the business continually, to me, it for a fund of the stage that we look at, it doesn't feel like a great fit, just because I do see a lot of reinvestment and growth.
Yeah.
If I had to put the valuation for our firm, it would be kind of what Dan had alluded to earlier, maybe 30 to 40, but I think we're talking about a control-oriented deal at that point, and I'm not sure that's really what you want or you need.
Yeah. So Eric, just to repeat that back, if you were going to do a deal here, you would value the company at something like 40 million, and if Rob wanted to sell 80%, that means you'd be putting up, call it whatever, $30 million to buy 80% of the business, and that's sort of where your head would be at.
That's right.
Rob, what's your reaction to Eric's sort of soft offer there?
We've walked away from bigger offers already. I don't think it's from a private equity groups, and I just don't think it's in terms of what we want to get done. It doesn't make sense for a fit.
What's the biggest offer you walked away from?
Over 60.
Over 60, all cash up front.
And that was March, April. So think about what's happened since March and April and where we're at.
Yep. All right, well, Eric, thanks for coming on Deal or Bust. Let's go to Ryan. Ryan, where's your head at?
Yeah, Rob, look, I really like what you're doing, and better understand the value prop that you're delivering to your customers. Banks and credit unions are in need of alternative ways to make money. They have to keep pace from a digitization perspective. So I really like, the problem you're solving. But you just hit this massive inflection point, which is phenomenal. And I think two things. One, you're better served, I think, both from an investment standpoint and for you and your investors to take a smaller round, somewhere in the range of 5 to 10 to the balance sheet, clean up the cap stack, and really go after it. And that's just not where our focus is. It's a little bit small for our institutional capital. But if I can talk to you behind the scenes and be of value add to you, I'd be happy to do it.
I'll definitely take you up on that. Thank you.
Ryan, thanks for coming on Deal or Bust. If people want to learn more from you and LLR, where can they find you?
At the website, llrpartners.com. Thanks for having me.
There you go. All right, thanks for coming on. Guys, if you're just tuning in, we're wrapping up Deal or Bust here. Fintech founder Rob with Segment. Really interesting space. Small for Eric, small for Ryan, but love the growth. We're going to go to Dan now, who's not scared of companies reinvesting in growth. He's a VC by heart, so he does this for a living. Dan, what would you offer here? Or if you're not interested, state why you're not interested.
No, look, I think what you're doing is right down the fairway of the things that we focus on in terms of infrastructure for banking and payments and financial services. It makes a ton of sense. I think a lot of FIs need what you're offering. I do think it's a competitive market, and I would echo some of the earlier comments. I would implore you not to sell a majority stake here right now. It feels like the wrong time. See, if I could persuade you to do a growth deal, I think that deal would look something like, again, $65, $70 million valuation, raising, it could be 5 to 10 of primary, and then maybe there's some secondary in there as well to give partial liquidity. But that's the sort of deal I would imagine makes sense, and I imagine we could be very helpful with our connections into the banking and banking infrastructure space.
Rob, would you look at a deal like that?
I think I'm going to talk to the board and see their interest, but I think I'll definitely reach out to Dan after and have a conversation with him.
Good. I get 5% of whatever happens. And just kidding. Dan, appreciate you coming on. Thanks for coming on Deal or Bust.
All right. Thanks, everyone.
All right, Rob, let's wrap up here. So listen, you got some really good feedback here. A lot of people bullish on the business. There's a lot of great questions coming in. I couldn't get to all of them on the CBInsights thread. Mark asking, what does Rob see as price earnings ratio for the investor? Hillary saying great advice from Martin Chavez. Others saying, Sandeep saying, Rob, you're so brave for coming on and putting all this out there today. Anything surprise you in terms of the feedback you got from buyers?
No, not at all. I think I think we're at a really great inflection point. I think we're going to continue to grow. We're patient in terms of a sell, so I don't think we're in a hurry to sell. If the right investor comes with the right connections and the right message to us, I think it's something we'd definitely be interested in.
Thanks, Rob. Appreciate you coming on Deal or Bust.
All right, thanks, Nathan.
All right, guys, there you had it. Special Deal or Bust FinTech edition here on CBInsights Future of FinTech Conference. You saw Rob come on, growing to $6.2 million in terms of run rate. Really nice growth in a very compelling space. You heard great valuation information and data ranging as low as, call it, 40 million, up to some folks getting higher to 65, 70 million. Maybe a strategic partner gets even above that. Regardless, they're building something super interesting. All employees are shareholders. You see the growth here on the screen today. I want to thank all of you guys for tuning in for another episode of Deal or Bust. If you enjoyed it, you can check out more episodes like this on my YouTube channel. Last week, there was an offer for $20 million live into a company doing $6 million top line with $3 million in profit. Incredible 3-person company just spitting out profits. I encourage you to check that out. And remember, stay tuned here to CBInsights Future FinTech. Coming up next, FinTech Hall of Fame announcement, reinventing insurance, and a big take on payments plumbing for FinTech and banks. You don't want to miss it. Again, I'm Nathan Lacka. Thanks to all of you guys for tuning in for this episode, the special episode of Deal or Bust. I'll see you on the back end here at the Future FinTech Conference. Take care, guys.